Well, welcome back, everyone. I hope everyone had a great Thanksgiving celebration. We are in a market that did close out the week, coasting up into all-time highs. You're looking at the SPY right now in a channel that goes back to October the 22nd, the bottom of the market. It is in the uppermost quadrant of this statistical channel, very far away from normal. Now, this move taking us up towards the top of the weekly pivot range, near the top of that 2 standard deviation channel, with things like crypto leading the top of the leaderboard. Is this market ready to break out and blast off? Or is this something that is just natural in weeks like these? Well, I'd have to defer to the latter. Technicals do, however, say very clearly on a daily chart of the Russell, the Dow, the S&P, and the NASDAQ. Save for the NASDAQ, all of the indices have made new highs. Now, the NASDAQ not having done so is problematic, as it does hold the majority of those Mag 7 stocks and in an overweight fashion. So if I break down the daily candles of the Russell, the Dow, the S&P, and the NASDAQ, we get to see inside whether or not we're getting incremental bullish signals that would support continuation higher. And indeed, the NASDAQ has seen a growth in that champion cross buy zone, resuming stage one of its sequence. We saw the S&P 500 E-minis get what's called a range breaker. And of course, we are pushing up and above the top of the champion cross buy zone on the Dow. The Russell is the only index that actually did not increase in its bullish signal on a 4-hour time frame. Nonetheless, the markets at large are telling us that a continuation higher is likely, but that continuation higher has to come with significantly more bullish signals on a day-over-day basis to sustain. The suspicion right now would be that the market is likely to give us a follow through to a higher high, but lead to this white hot elastic band stretched very, very far, and very likely then start to pull back. If you look at the S&P 500 E-minis and you take a look at it on a daily chart, we do see the champion cross zone growing again. We don't have any other incremental bullish signals underneath the bar. Now, looking for things on a day-over-day basis, like a range breaker or a wealth signal, would put us in stage two and really secure the durability of this breakout. But we don't have that. In the case of breaking it down to a 4-hour chart, we do, which allows me to say we are very likely to see a higher high follow through as we move into the beginning of next week. However, we have to give thanks for these incredible tools developed by the only 33-time real money, domestic and international on-site trading champion, and that would be Rob Hoffman. The toolkit is telling us that, yes, we can expect likely a higher high. However, we have to respect the fact that the day-over-day picture does not give us that same view. It tells us that we are likely to rise, but there's no way to gauge that durability without an incremental bullish signal. So staying safe out there into the beginning of next week makes a lot of sense, and recognizing that we are very far away from normal, pushed into the spot where performance has to be perfect. Otherwise, this poor market is likely going to have to pull back towards the mean. And mean reversion kicking in would mean coming down after a push up back towards the center of that channel. That's something that I suspect is a likelier outcome as we move through the week with an open that can start off slightly higher. I hope that this has been helpful to cap off this holiday week of trade for you. Wishing you and yours a healthy and happy weekend, and looking forward to seeing you on the flip side. Have a great rest of your day, and thank you for watching.